The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, as we take a look at the market trade action that we saw to kick off the month of September on Tuesday, plenty of green on the screen in the grains and oilseeds. Really, the only market that didn't take advantage of some green was soybean oil. Livestock, too, finding a bit of support. And I guess the outside markets found plenty of pressure to start off the month of September. But largely, we kind of continued some of what we started last week in the grain trade in particular. Let's talk about it. Joining us now, we were able to catch up with him last week at the Farm Progress Show. Well, now we're both back at our offices. Jacob Burks with agmarket.net is with us here today. Jacob, hopefully you had a good trip home from Boone and a good Labor Day weekend. How are you, man?
Yeah, it was a good week. It was a hot week over there, and funny now you're talking about maybe some potential frost damage later. But yeah, it was a good trip home. It's kind of one of those Mondays, and what's worse than a Monday in the office is a Tuesday that's still a Monday, right? So, but no, it's been a busy day here, and glad to be back sitting in the office trying to catch up and take care of some things here.
Yeah, well, you mentioned the F word, frost, and that's something we touched on that with Eric Snodgrass in our weekly update here as well today. And there is that potential out there. And anytime you roll the calendar to September, for instance, some of the northern states, that potential is there. They're talking some upper 30s later this week with this front that's going to move through. I'm wondering if that maybe added a little bit to the overall move to the upside that continued really across corn, beans, and wheat on Tuesday. Sure. What do you think?
Well, I think first of all, you got to, if you're going to step back and look at the, everything. I mean, everything's positive today except bean oil. You got to step back and look and say, okay, we put a lot of negative news into this marketplace for a while now. We've grown the crop. Every report, we've got a huge crop coming in, both corn and beans. Everything has been very, very negative to price activity. Now you're getting into the end of the, we had a change from into the quarter four for some of these investment communities that have seen a very large negative, short position in these grains. You start talking about, potentials of, different interest rate investments. You talk about all these different things that can affect, from an economic standpoint. You see crude oil down $3. So the tides have just changed. I think that this is really just an investment flood of some outside money coming into the ags. I really feel like that's a big part of it. I think you've got a lot of weather things that are taking place right now, whether you're talking about northern hemisphere or southern hemisphere. So I think this overall play today was something that the market was a little bit exhausted of all the negative news. We do have some positive news coming in, and I think that the market's just kind of ran with it today.
Well, I wonder, as we're getting a bit of a bounce here, some folks are talking, well, did we put in a harvest low in August? And I wonder here, can we sustain this rally, or are we going to get our hearts broke here at some point this week on some of this rally? I think that's a big question for me. And I wonder too, we saw funds start to cover their shorts a little bit more on Tuesday. But does this train stop? Do we see farmers selling pick up on this rally? I mean, what are your thoughts there, Jacob?
My first thoughts when you say, did we see a harvest low early? The potential is there, yes. If you go look at the charts, if we can go ahead and close this market here above that 409 level, if we can push a little bit higher in the beans and get up to those 436 levels, yes, you can say that you've already started it. I mean, it doesn't mean we have to do it today. We need that somewhere that consistent close above that. I think it's going to be very important to go ahead and say that and confirm that that low is in. I am still prepared that it's not. Okay, so I'm keeping the preparation on until we go through that September report. I mean, we've all heard the term that big crops get bigger, right? And so that's what I'm fearful of as we go through next Thursday's WASDE report, that all of a sudden we come in here and we see another jump in yield. That's a possibility, enough of a possibility that I think it's wise to keep some protection on and try not to guess where this low's at. I mean, we go back to analog years, and I do understand that things are different. I understand that weather's changed. So the potential is there, yes, that we have seen that harvest low. And so that's why I think, the options give you a lot of comfort knowing that you still have that top side open. But yeah, I mean, it's starting to form that way. And if we do get some confirmation of that, come mid-September or next week, whenever we see that report, I'll be the first one to say, hey, I think that's done.
We saw more demand news as well. China stepping in here, buying more soybeans on Tuesday. And, thinking about this demand picture in general, you mentioned South American weather, hearing some chatter about how dry things are down there as they're getting ready for planting and that window opening up, things like that. So, demand, we've been talking about this. We got to spur up some continuous demand. And seems like these lower prices have done that to some degree, Jacob. But how long does it last? I think that's the other piece of this equation as well.
Well, how long does it last, and how do we actually execute it? I mean, the fear you have right now, more so than anything, is the dry weather not allowing us to get our crops down the river, right? So you're seeing some historically, not historically, but you're towards the historical low end of what this river can take. You've heard of, last week we heard of a grounding of a barge. And so that's going to, basis is reflecting that as well up and down the river. So that's going to be something that we have to watch too is we need to see the physical movement of this grain, right? So we talk about sales all day long. We talk about next year and what we're going to see throughout this next, 12 months of marketing season that we just started here today. I think that the anticipation is that we're going to see a bigger export number. That's what the USDA put in there when they started increasing the yield. It was kind of a balance sheet trick there that we said, hey, we were going to add another 150 million bushels of exports. And I think that's something that we need to make sure that we're able to get out the door here as we go through harvest. And right now, it doesn't look like it's going to be an easy chore. So I will pay attention to that as we go forward. Is obviously whenever you see a 183 yield and a 2 billion bushel carryout, you're going to see more exports. But the problem is those more exports are going to come at the cost of our price. So to get that accomplished, you're going to have to see some lower prices. So, the demand domestically, I think, is what my focus right now is. I guess my focus is of watching, because that's where my hope is. That's where my hope is that we can find some continued alternatives and ways to get the ethanol accounted into the SAF and things like that. I think are going to be very, very big for us as we go forward. Yes, Brazil's dry right now. Are we going to be planting as much? The later we wait, the less likelihood that safrinha crop is going to be huge. But the thing about it is they're actively growing right now, and it's going to continue to compete with our exports.
I want to go this direction a little bit with you. Obviously, we talked last week in Boone. I'm curious what else you might have heard from farmers there after we talked, and I'll frame it up with this as well. The latest Purdue University CME Group Ag Economy Barometer out Tuesday, dropping 13 points from July, a reading of 100. And you look at the future expectations index and current conditions, those had substantial drops. And one of the primary concerns, 30% of respondents said lower commodity prices were their primary concern, 33% citing high input costs. So I think that right there kind of echoes what we've been hearing now for weeks upon weeks, is that the overall health of this farm economy is a little concerning. And there's a lot of tough decisions that have to be made on the farm in terms of your marketing right now, right, Jacob?
Yeah, and last year we were really preaching, hey, lock in some of those input costs, but make sure you're going out and selling the appropriate amount of grain to cover that cost. You don't want to be really over your skis one way or the other on the cost side or on the sales side. And I think that was very good, encourage. Right now, you can't do that. We can't encourage guys to go out there and be aggressive, locking in that input cost. Just the input cost right now, and especially when you talk fertilizer, is a little bit higher than what we can even pencil out to get to a profitability. I think their fears, that them saying that that's their fears, that's justified. I mean, because when anybody that has looked at it from a balance sheet standpoint, it just doesn't make sense right now. And I think that with the ability to store grain, with the changes that they've made on farm to be able to prolong that and manage that along the way has really been helpful. I think as we go through harvest here, once we get that glut of extra corn that can't be stored on the farm, I think the bins are going to lock up until the banker calls. And unfortunately, I've had some conversations with bankers here, on a very private way of, hey, I have guys that are in, the bankers telling me they have guys that are in serious trouble and don't have it's not laid out to be cleaned up very quickly. And I think that's the biggest fear. And that's something that I don't take lightly. And even to the point when you get into the psychology of some of these producers and where they feel like they're at. There's some serious stuff coming down the pipeline that says, hey, this farm economy is going to make some major changes across some of these, down to the farm gate.
Well, and with that in perspective as well, if someone is just completely undersold here, I know you mentioned not getting too aggressive, but at the same time, as we're near at harvest, I mean, if someone has to look at maybe doing a little bit of a $4 board price on D's corn, for instance, I mean, there's tools they can use, I guess, this window if they are just grossly behind here. Sure. and don't want to lose some of this potential that we've seen in this recent rally, Jacob.
No, I think the one thing that options give you right now, the first thing is options. When you buy a put option, you're honestly hoping that it goes worthless, right? You're hoping to lose the premium, and markets make a really big move up, and we can make a better sell. The one thing I would think is that right now the implied volatility on options are at a level that's very, very low. So it's a buyer's market in some of these options, and it does give you the potential, the comfort of knowing that you have a downside protection. And I think it's all going to go back to the fact that as soon as you talk to a producer about that, it's going to be, well, aren't the lows in? Why do we need to protect ourselves whenever the market looks like it's at a lower level? I mean, that's when I encourage guys, like, puts are not always a bearish strategy. It's actually something to protect you while the market, you're allowing the market to go higher. So those are the strategies that I would, long option only, if that's what you're comfortable with, but just something that says, hey, I don't need to look at even going out to 2025 when you're talking about putting in next year's crop in before we've even harvested this one. I think it's very important to look at, hey, what can you not see happen? You can't see 2 years of 380 to 350 prices if this thing turns around. So I'm encouraging guys, especially guys that are in a cash flow situation where they don't need or can't afford to see those depressed prices 2 years in a row.
Jacob Burks with agmarket.net's our guest analyst here today on Market Talk. Let's get a few thoughts on the livestock trade before we wrap up here, Jacob. A pretty solid start to the month of September. Cattle and hogs kind of kicked it in gear around mid-session, getting some decent closes there. Your thoughts in this protein trade in particular, I guess, starting with cattle, anything changing in your mindset here as we roll into the month of September and roll into fall?
Well, I've honestly been a little bit more negative in the live cattle, just simply because of what we've seen, macroeconomically. You're seeing just a little bit of signs at the retail level that we're going to be, consuming more pork, more chicken, kind of a recessionary trade, I think is what, if you call it, where the beef cutouts are going to be a little bit, too expensive for the consumer as we go forward here. Grilling season is winding down. You're starting to get into more of the hams and more of the holiday style of meals. And so just the market had a very negative feel to it. And, when you see the stock market down 500 points and live cattle are up $1.50, $1.80, hey, that's a win today. That is a big win. We didn't really do anything to change the trend. So I think that this right here did, if nothing else today, it gave me a lot of encouragement to get out there and be very aggressive with producers on the cattle side of things. Locking in some floors like we talked about in the cattle, because there is a large amount of room to go lower. And one thing that, if you talk to Brian Split about, he's going to point out that this big 4-year move higher that we've seen in the cattle, if you go back to a monthly chart, we did, as we moved over into the October, gap below the 20-month moving average. And if you go and look at that chart, it'll scare you of the amount of room that we have to go to the downside. And I think that was enough, to be very aggressive and be very active with protecting that downside if you have any exposure out there.
Yeah, plenty of air underneath this market in particular. And you mentioned the equity trade too a little bit. And I found it interesting that both cattle and hogs found a positive day with plenty of pressure in the outside markets on Tuesday. We saw that divergence that we really haven't seen all summer long, it felt like, Jacob.
No, you can lay a $5 Dow or a S&P chart on top of the cattle, and it's been a very tight correlation. I don't have the mathematics underneath my hat here to tell you exactly what that correlation's been, but it's been strong. And it's been something that's been a good measurement of what the consumer is going to be able to do, like the measurement of the economy overall. And I think that you're getting a little bit more detailed where you're starting to see, box beef down last week. The cutouts were down last week. But what's going to be more affordable, what's going to be, move hogs, I think is something that we're seeing it on the retail side of it. I do believe that exports are going to be huge, and with the dollar going back up another 20 points today, we're over 101.80 right now. I think that's going to weigh on that trade a little bit. But we're at a point now where we need to see that the exports continues to keep pace, to keep hogs going higher, I believe. But that's one thing we could see: hogs and cattle and everything take a little bit of a depressed price as we go through the winter.
All right, let's put a bow on this here today, Jacob. Final thoughts, anything you want to mention or reiterate to producers listening in here as we kick off the month of September?
No, I do want to, the main thing is when we're using put options and we're talking to producers, it's a risk management tool. This is not a price prediction or a price projection or anything. I tend to root for higher prices most of the time because that's who I'm working with as producers. But I don't want to get caught up in the fact that I'm bullheaded and I always want these markets to move up. I do understand risk management here, and we've got producers out there that maybe haven't taken all the advice that we've had. We've done a pretty good job of marketing grain, marketing cattle as we went forward. But there's opportunity here that some of these guys are just caught behind, and a lot of the listeners are going to have a lot of sales that they need to make in a short amount of time. What do we do with basis? But there's a lot to talk through about your own logistics and how you get into your cash sales. I just encourage you to find somebody that you trust and somebody that can help you walk through these. They're not going to have all the answers, but they can help you walk through it.
Jacob, if folks want to reach out to you and the team there at agmarket.net for some advice, I know a lot of great ways to get in touch. It really starts with that website and that app, doesn't it?
Yeah, we kind of put it in our name. So we encourage you to go to the website, and we do a trial our intel. We put out tons of stuff here on a daily basis and a couple of weekly videos. We encourage you that be a good place to start and see what we have to offer.
Agmarket.net for more info. Jacob Burks, always good to talk with you, sir. Have a great week. Thanks for joining us here today on Market Talk.
Hey, thanks for having me, Jesse. Appreciate it.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.